Hey everyone, Nick Shaheen here looking at Nvidia. Great day, great week, great month, great 6 months. Suddenly everybody loves it again. So it's always tricky to find out, okay, where do I get on board this freight train? It's not alone. The whole sector, in fact, the whole market is at all-time highs. So maybe it fixed its own problems. Maybe it never had any problems. Maybe it's a matter of sentiment. All this is, raises doubts on both sides of the fence. Those who are bullish, those who are bearish. I don't believe it's a cheap stock from a valuation perspective. It is a growth stock. It should be. So valuation is not that important. It's 15 times sales. That's pretty steep. 62, 63 PE. If I compare it to, say, AMD, who is very expensive, but also the one that is at 248 PE, but only 9 times sales. So its stock price to its sales is reasonable, more reasonable than than Nvidia, for example. Intel is cheap on all counts. But that doesn't mean it's the best stock to own out of all of them. All depends on whether I want a growth stock, a stock that's trying to recover old glory, and a stock that's kind of in limbo, which is what this one is. So if I haven't bought the stock yet, is this a good time to buy it? So this is where we wish we had the power of hindsight, but we don't. So we can look at hindsight from the chart. This is a daily chart for about a year's worth of data, I believe. Yep. So it's hard to see what happened last time they were up here. That's where I usually change time frames to something that gives me some projections. So I'm going to take this out. Not sure that this is relevant here. At some point, there was a head and shoulders they needed to hold. They fell apart. So at 290, last time it was here, everybody loved it. I remember here experts all over, CNBC, or if you read the upgrades, and they all couldn't have enough of it. So it was the stock to own for everyone. So what's different this time? I don't know if there's anything different. Some blamed it on some Bitcoin related weaknesses, others the China thing, but it's all muddled because the China thing wasn't on the whole time, even though it was a factor for the whole sector. But the drubbing here down from 290 to 120 something, 125, let's call it, is extreme. So clearly at some point everybody decided they hated it, they couldn't have anything to do with it. And now they want everything to do with it and nothing else. So this is wrong. This is probably wrong, given not that doesn't belong up here. The risk is last time it was up here, they hated it. So what's to say this time won't be the same? For example, those who entered up here in this little island top here, they might be stuck and say, thank you, I'm out. And then that puts some pressure. So this is not the same as saying short the stock because it doesn't belong up here. I'm saying somewhere in the middle lies the truth for now. So onus is on the bulls to stay up here, but they are in control. So the buyers are definitely in control. Dips are buying opportunities as long as the whole market is also rallying. So the S&P is at all-time highs. Clearly, the buyers are in control. Sentiment favors the buying versus somebody who's trying to short. It's hard to time a short, but it's easy to say, you know what, let me stay out a few ticks to see what happens, even if I end up missing some. So I'm not looking for a perfect place to short it, but I'm looking for a not so obvious potential top. And last time it was up here. By here, I mean like the next $10, $20. So yes, that's a lot of money, but it's a lot of money to be wrong on the downside because it can come quick too. So dips are buyable. So if it falls back to the prior necklines, and we recently had a neckline around 220, I'm not saying I want to see it down there, but I'd be much more comfortable, if not towards 200. So the closer it comes back to 200, the more confident I am in the size of which I'm going to start being long if I'm long it. So this is a stock that hit me wrong. I tried to short it, but luckily it was an iron condor. I am comfortable holding credit call spreads if I want with a tight stop, but all depends on personal preference. It depends on the whole balance of the portfolio. If I'm long everything else, why not shoot to try to top some stocks. So standalone short trade, not sure how easy it's going to be. So the idea here is to not get in late and end up buying somebody else's profit. Great trade as far as whoever has it already. So let's drill down on some lower time frame charts to see if we can find the potential, sorry about that, turning points. So I'm looking at this period of time from December on, sometimes late December on. The point of control is somewhere around 240, 239, which means that if stock falls towards it, it should find some support. I'm just looking at it, and I can tell you that just visually, unless there's something bad in the whole market, this should be through. It should find support. It's a support band. It's not a hardcore line in the sand. It's just more of a zone. Because this was an active buy-sell zone, buyers and sellers were most active around here. So chances are if price visits it again, they're going to fight over it again. And another stick in the mud, so to speak, is around 229, 230. Just because of this poke right here that failed and then finally served as a breakout and was also proof that it was support. So proven support. So now we have natural support at 238, 239, proven support at 230, and some sort of a cluster breakout zone somewhere down here at 220. So this is not because I'm looking downwards, because I'm just trying to see where I can catch the falling knife. So then it becomes, okay, so do I catch it here? Do I catch it here? First of all, it all depends on my gut and how it's falling and my time frame. So these are important. I think the first order of business is to hold about 241 to maintain the buying. So this gives me a lot of comfort on the 120. So this is a 2-hour chart. So if somebody is trading faster than this, they can go to 60-minute chart or 30-minute chart to get a little more granular, and you can see some patterns developing. There's no doubt that there's machines are trading it. So if you get to 15 minutes or 5 minutes, but then now it becomes an intraday trade. So 120, 240 gives you an idea. A daily gives you a slower idea for somebody that's not very active. But it's definitely healthy to look at different time frames. Like if I stopped right here on the daily, I didn't have a clue. Now I extended this shaded area, so that would have served me as a visual. Wait a minute, something happened at this level above a while back. So then I go up one to the weekly and I see this. So if I wanted to clean up the clutter, I can do it a monthly, and then, okay, now we have a clear vision as to where it is relative to the highs, where the ledges are. On the monthly basis, it is at a ledge where it was in contention since January of 2018. That's when the first correction hit the markets, when we had a hot jobs number. So here, so those are two closes that are close together, and then this monthly close was somewhat lower, and then they said, you know what, we're going to make a new high. They did on a closing basis. They failed off of it, and then August, and then they failed miserably. So we are close to this cluster of not tops, highs, and these are months. So it's a legitimate area to start asking questions. It has had higher highs, so there was 1-2 closes above it. This one was a failure. So it is important to start asking questions. So if I'm long, this is where I start playing with house money. So if I bought a call, I spread it. I sell a call above it, so then I'd be long for free, or I sell a call diagonal against it, so I'd be lock in some profits. Or I just get out and buy a lottery ticket way above that, or out in time. I just play around with time a little bit, because it has had a great day, a great run. So this is kind of how I would approach things, and this is not against this company. Let me see here. I was looking at Chewy, actually from the long side last week or 2 weeks ago. I can't remember. So for some reason I didn't do anything with it. So I'm looking at it again. Like, okay, maybe now. And then I stopped myself. No, definitely not now. Even though the buyers are in control, the patterns look good. It's just a place from which they just fell apart not too long ago. September of last year, on earnings, management for some reason delivered a result that Wall Street hated, and that was a floor they were trying to hold. haircut, big time haircut from there. So same logic. Now they're back to, so 25, 27%. Now they're back to it. So they took back all of it, but they're back to that big ledge. What if somebody was stuck there? If I was stuck there, I'd be, thank you very much for this gift, I'm out. So not that this is a place to short it. This is a place to definitely wait before I would go long, because I would want to see what are their plans relative to these failures. It doesn't look like it has earnings anytime soon. So what's the catalyst to take it? The markets are at all-time highs, so we already know their strength. Unless the markets take a leap higher, I'm not sure that I want to jump the gun and see. What ideally could happen here? The good thing is that it has a nice cluster of consolidation here, so it's not like it reached with one high poke. It spent some time, so this candle has a good base here and the point of control from the volume profile perspective. If I zoom in a little bit, maybe that'll be a truer number. Okay, so it's still the same concept, same statement. So it has a good base and it's trying to break from it. That's fine. So ideally I'd want to see them go above it, come back to it, test it for footing, and then they go about their business, and then we'll look at a different ledge from which they fell before. So same logic with Nvidia. So I wasn't picking on Nvidia. In fact, I've said all along that AMD is the stock to own because it's the chip champ, 2 years straight, the best stock in the S&P. Not easy to do. Usually when a stock does it one time, they say there's no way they're going to do it the second time. Well, they did it the second time. Most impressively, the first time it did it, the whole market was down and it was up 50%. Anyway, back to Nvidia. Not a clear point of entry, even though the stock is in the hands of the bulls. So it's not a bearish statement against it. It's just me. It's not for me, it's not a place to start long or add to longs at this point in time. Nick signing out.